All right, Chris, how you doing, man?
Good, good.
Good. Yeah, so Rashid Lokar with Legacy Builders here today, and then we got,
Chris Crespo, United Mortgage Corp. I'm the loan officer.
hmm yeah. So what we talk about today?
So we're gonna talk about unlocking the door to home ownership.
That's a great topic. That's a great topic. Yeah. So myself, I'm a realtor, and then you're a loan officer, so this is a good conversation. So let's get right into it, man. What are some of the things that you see out there that people think they can't buy a house, but they really can?
Yeah, as a matter of fact, everyone is under the impression that you need to have perfect credit score to obtain a property, and that's not the case.
Okay.
We have different programs that work with different types of credit.
Huh?
So one of them is an FHA loan. So if your credit is not the greatest, and when I say not the greatest, I mean like 600, 620. We use FHA loans for that. You can still get a decent interest rate with a 630 credit score.
Yeah, that's not bad at all. Only at 630. So I always hear people say too, you can actually get a house or a home loan, should I say, under 630. Like I heard as crazy as 580.
Yes.
Is that really true?
That is true. So with anything under that, it's called manual underwriting.
Okay.
Now, the debt to income is what we go by.
Mm-hmm.
It's going to be lower because
Okay.
the risk is higher, but it is doable.
Okay.
If we just got to go, we got to look at it case by case.
Case by case. But is your mortgage payment going to be $1 million?
It won't be $1 million, but it won't be the cheapest either. Again, you got to think of it as like this: if the bank is going to loan you the money to obtain a property, but the credit is not the greatest, the risk is going to be higher.
Okay.
So you'll still, but here's the beauty, right?
Yep.
Even though you get a house at a higher interest rate than what you like because of your credit score, you can always refinance it later once your credit gets better.
And that's good to know because a lot of people say, okay, I'm scared of the interest rate. I'm scared of that situation, but you should still buy a house in that case. Why? Because at least if you get a house, at the end of the day, you get some type of return. Meaning that if you pay your landlord, you're not getting anything back. But even if you have a low credit score and you're approved for a house, you're still getting money back. And to your point, Chris,
Absolutely.
down the line, you can refinance. And when we say down the line, that could be as fast as a year. It could be sooner than that, or you have to wait a year to refinance.
6 months is what we usually say, but a year will be best because you show a year worth of history that you've been paying everything on time, and it looks better to the banks.
So that's great right there. So imagine that. So as early as 6 months, but a year is better. And this is the perfect combo right here because guess why? You got the bank right here, and then we got the credit specialist with Legacy Builders,
Yep.
so we can get your credit up and get you that better score and better interest rate. So it's a win-win all the way around.
All the way around.
All right, no, I like that. I like that. So I guess my other question for you then. So what are some other type of loans then outside of FHA that you talk about in general?
So we have different loans, such as we mentioned FHA. You have conventional.
Okay.
Now with conventional loans, you want to have a minimum of 680 credit score.
Okay.
That's the sweet spot.
Okay.
All right. Then you got other loans such as a USDA loan. Not many people are aware of what that loan is, but that loan is specifically for property that's in rural areas.
Okay.
Now, the great thing about that type of loan is you can do 0% down. So it's like 100% financing.
100%
But the property has to qualify.
Okay.
We have a website that we go by to make sure that it qualifies for a USDA loan.
And that's pretty much in every state, right?
Yes.
Wow, that's crazy. So I know just to clear it up too, from a credit standpoint, a real estate standpoint, and a mortgage standpoint. So it's two major things that you pay for when you're buying a house: down payment and the closing costs.
Correct.
So how does that work with the USDA loan with closing costs? Is that included too, or
Yes.
no? So wait. So the closing costs and the down payment can be rolled into that?
Yeah, that's one of the.
So wait, no, say that. So the closing costs and the down payment can be rolled in that?
rolled into it. Yes.
Wow.
The only thing, though, I said you're gonna be in a rural area, so not everyone can deal with that. But for those who can, take advantage of it.
So the perfect example I always like to use when you say a rural area is like, listen, instead of Walmart and McDonald's being 5 minutes away, you're gonna have to drive about 20 minutes. But listen, I'll take 20 minutes to put zero down any day. I mean, that's my take on it.
Yeah. And then just to go like other things that I hear is, hey, aside from credit, we just touched on down payment and closing costs, right? Even if you go with other products such as FHA conventional, the most important one that I would say is down payment. If you have your down payment we can work with closing costs.
Okay.
You know, we have something called seller's concession where I work with the agent and we work with the sellers. We help you with the closing costs.
Okay. Correction. This agent right here and the agents with legacy builders. Correct.
I am sorry. The agents with legacy builders.
Right.
No, but to your point, that's a good thing to bring up with closing credits because that helps out people that don't have that much money. So depending on when in the market, what time of year, sometimes we can really negotiate. Great agents can negotiate rolling some of that cost in. It's not guaranteed, but it is an option. And if you have a great agent in the right scenario and they guide you the right way, we can roll some of that money in to help out if you don't want to live in the boonies, so to speak.
Exactly.
You know?
Exactly.
Mm-hmm.
And you know what? Let's just clear some things up because I know a lot of clients have questions about the difference between a realtor and a loan officer. So why don't we give like a brief description of how we work together, but what's your role? What's my role?
Yeah. So as a real estate agent, I'm the person that after I get the pre-approval from you, you know, both sides have it. The realtor has it. You as the buyer has it. They get the approval. I'm the person that takes them out to find your home or sell your home and the entire process, work on the paperwork, the contracts, lining up the contracts, working on the negotiation, meaning coming to, you know, a price that we all agree to, going over inspections. After you get the house, we're in contract, you know, some inspections happen. You know, we kind of take care of those type of things, you know, on a real estate standpoint.
Yeah. So then for me, as a loan officer, what we're responsible for, as Rashidi mentioned, we're gonna qualify to see how much of the price point you can essentially qualify for.
Mm-hmm.
Now, the reason why I bring this up is because sometimes I'll have clients asking me questions about the property. So this is why we work closely as a team.
Mm-hmm.
You want a realtor or an agent on your side because they're very knowledgeable on the type of property.
Mm-hmm.
They'll be able to give you suggestions of what to look out for,
Yeah.
and they're always going to look for your best interest. At least I can speak about legacy builder agents.
There you go. I like it. I like it. You learn it. You learn it.
In your best interest. My role, my goal is to pretty much tailor make the program for your needs, whatever it is that you're looking for, whether it's because of down payment or whatever the case may be. I'll look at your situation, then I can see which is the best program for you.
Okay.
And then together we'll work because when you find a property and you make an offer, then they'll send me all the information and I'll pretty much run the numbers.
Yeah, and it's good that you brought that up, that we have to work together in hand, because a lot of things that go into the equation from you're buying a house. All houses are not one and the same, meaning that one house might have a different level of taxes. So as a realtor, I gotta relay that message to Chris, like, hey, listen, this house is 500,000, but the taxes is 10,000. If I don't relay that message, you as the buyer don't know what your new payment's gonna be, and that's huge. Because same example, this house is 500,000, and your other taxes is 15,000 instead of 10,000 a year. That's a big difference in your payment.
Absolutely.
That's a paying extra $250 in your mortgage. You might not be able to afford that. You might say as a buyer, like, hey, I don't want the house because it's just too much. It's over my budget. And we work together to make sure you're not house poor. And let's break that down. Big one. What's house poor? Meaning that just because you get approved for $500,000 does not mean you have any business getting a house that costs $500,000. So a lot of people get carried away with that because, yes, on paper, it shows that you can afford it. But what we do also, again, working together, and as legacy builders, we look at all the details. So we'll look at your situation and be like, listen, you got approved for 500,000, but the way you're spending and the way you live your life, and it's okay how you live your life, but you probably can only afford $400,000 to be on the safe side. And those are some of the conversations we have as a team and as legacy builders and with Chris here in the bank.
Yeah, absolutely. And I'm going to go a little off topic with that. But one of the reasons why I got into real estate is because in the early 2000s when the market crashed, my mom actually had a home. Unfortunately, because of a little bit of a language barrier, and she didn't really know much. She was a first-time home buyer. Whoever gave her the loan kind of did some things that wasn't ethical, let's just say, and it cost her house at the end.
Wow.
You know,
Wow.
so ever since then, I was too young to be able to help, but now ever since then I said, you know what, I want to get in the real estate game to truly help people out, educate clients on what to look out for. And to your point, although on paper it says that you qualify for 500, doesn't really mean that you should spend 500, because you don't want to be paycheck to paycheck trying to make a mortgage, and if you miss a paycheck, what's going to happen now?
Mm-hmm.
You know.
No, I'm glad you brought that up because that's why we do what we do. Honestly, similar to your story, help out my family as far as looking at paperwork and looking at documents, and missed out on a couple opportunities to make some more money, whether it's selling a house or anything across the sun when it comes to home buying and home ownership. And so that's also the reason why I got in the game, and I'm passionate about credit and helping people having knowledge, and that's what legacy builders as a whole. That's what we're all about: behaving with integrity. I mean, it's and that's why we have a great partnership, because not only that, things happen, meaning that you might be in a rough time, and the legacy builders and the combination with Chris here and U.S. Mortgage will go over the other things like, hey, before you get in a foreclosure, you might want to ask questions to your bank like, hey, can I put a claim in or claim a hardship so you don't fall in a situation where you get foreclosed on, or we keep in touch with you because one, we care about you. Two, of course, we want you to tell your friends and make more sales. Also, you do want to make a little money. We love you, but we do want to make a little bit more money. But the point is, we may have say an option like, hey, you got a lot of equity in your house, maybe refinance right now. Maybe that's an option to help you save some money, or other things. You may want to fix that kitchen you finally wanted to do. You're 7 years in, and now you don't have the extra 15, 20,000 to make that kitchen and get it done. For us men out there, your wife's, I'm tired of this kitchen. She's been nagging you for years, and you don't want to pay out of your own pocket right on the spot. Now you get with Chris and be like, hey, you have the house a long time now. You have about $50,000 worth of equity you can pull out.
Mm-hmm.
Let's get a tight quote for what it costs to rebuild that kitchen, and let's pull out this 15,000. And it might only cost you maybe $400 or $500. Don't quote me on this number; it's not real numbers, but extra. And we're going to get that kitchen done. So it's things like that where we collaborate on, and we're constantly involved with all our customers all the time.
Yeah, yeah. And I actually have a question here. Shout out to Phil out there.
Mm-hmm.
He's asking, what happens if I have terrible credit? Great question. So part of our team in the Legacy Builder, we actually have credit repair specialists.
Mm-hmm.
What happens is they'll guide you on what to do to get your credit back up there. Now, it's not going to be an overnight thing. It does take some work. But the key thing here is, one, you got to get the knowledge and the education to do so. Another one is, let's see, how to budget. You want to, if you already know that you want to purchase a home in the future, you have to start your budgeting system. You got to find out where to save, your spending habits. Don't open up a ton of line of credits. Don't max out your credit cards.
No, that's a great point, and I like that you put that together, because with legacy builders, like you said, we have a savings and budgeting department, and we also have what's called a financial analysis. So not only do we create a game plan for you for savings and budgeting, because let's face it, that's hard to do. The way these bills are set up, it's hard to save, and it's hard to budget. But we actually create a detailed saving and budgeting plan, a detailed credit plan, and to Chris's point, which is key, we actually educate you and teach you how to maintain your credit, restore your credit, but more importantly, on top of that, navigate your credit when you come on hard times. Because we all know things happen in life.
Absolutely.
People get sick, people lose jobs, but you don't want your score to drop off 300 points. The education we actually give you, it helps you to navigate that, so you know how to shake and move. Meaning that, hey, this month times are hard. You got a $5,000 credit card this month. Hey, Mr. Johnson, go and put $3,000 on this credit card this month. Next month, make $700 payment, and the next month on the other card, use $1,000. We guide you and teach you how to use your credit so you don't hurt your credit when you're coming in on hard times. Which honestly, most companies don't do that. If you know companies that do it like us, let us know. We want to see what they're doing too. You know what I mean? So yeah.
And then now going like as far as getting approved, right? Now there's three factors I always tell my clients. Credit is one, down payment is the other, or like closing cost funds is what we say, and the other is the employment. Now, as far as employment goes, we do, as a loan officer, I do have to verify everything.
Okay.
There are programs out there that, let's just say, as far as income goes, we can go the non-QM way or the non-traditional way, which is called DR, the SCR loans, which is based on the property sold. But that's for another conversation.
Mm.
Just know there are different ways to get approved for a property. That's why I say we go by case by case. What I like to do is I like to get all the information. Once I have the information, I can determine which product would be best for your scenario or your case.
I like that, man. I like that, man. And speaking about that with loans, man, that's good information to know, and that's something why we make a great team, because we go over those things. We go over the do's and don'ts when buying the homes. You know what to do, what not to do, how to use your credit cards, bank activity. It's so much that goes into buying a house that a lot of people are not aware of that can impact you. Because to your point, Chris, we've been in situations where we have somebody in the middle of a loan and they take out a $10,000 credit card, or they want to buy furniture. And I get it, you're excited, but personally, I know you got some stories, because I had a story where somebody was in the loan, we're under contract, whatever the case is, and she bought a whole furniture set and put, I think it was like 8 grand, and it was like, what are you doing? And it was an honest mistake.
Yeah.
But that was early in the game, way back. Now we created a system where we teach you on that. Matter of fact, Chris, also, we have our ebook that's coming out. We have our credit courses that's coming out that you can purchase. And we actually have a home buying course that's coming out where we walk you through these steps. So we prepare you for these things so you don't feel overwhelmed when buying a house.
Yep.
There's a lot of questions that go out there when it comes to that.
Absolutely. And I personally tell my clients, and I'm sure you do too, Rashidi, correct me if I'm wrong.
Yeah.
I tell all my clients, when you're in this journey or this process, you're not alone. One of the things that I like to tell all my clients, I communicate a lot. I'm there. If you need to reach me because you have any questions or doubt, I tell all my clients, reach out to me, whether it's calling me or texting me, because I find that with some of my clients, they tell me that it's almost impossible to get in touch with their lender, and that's why I like to talk about the type of service.
Yeah.
If you're going to get into one of the biggest investments of your life, you want to have top tier service. You want to have quality service. Yeah, you can find service out there that's cheap, but is the service good? Cheap doesn't always mean great.
Yeah. Now, I'm glad you brought that up, because this is the reality out here. It's a million banks out there. Like, literally, there's like a million banks out there. So that's the key thing what Chris said, where is providing customer service and dealing with people that actually care. That's a real thing. A lot of people don't care. Everybody's about the dollar. Trust me, we need to make money to survive. Hands down, no doubt about that. But at the end of the day, your best interest is our number one priority. Then it's the money. Once we got our best interest intact and we're making sure we're taking care of you, then we focus on the financial part of it. But caring is huge these days. So if you want to work with people and companies that actually take care of you and care about you, this is where to go. A couple other things I want to talk about with the home loan and the buying process itself. Like, how long does it typically take to process everything? Because I always hear stories like, oh, my bank guy is moving too slow, this, that. Can you put in perspective what's the timeline of process? Because that's always a good one.
Yes, thank you for bringing that up. So here's one of the things, right? Some people have this misconception that we just sit behind the screens and that's it. No, there's way more that goes behind the scenes. Number one, when we get new clients, right, we have to have certain documents and information in place before we can even begin the process, because we need to have that and set up the application correctly. Now, in the process, we're going to work with people that's known as the processor and underwriters. Underwriters are the decision makers. Now, before we give your application to the underwriters, we want to make sure that the application is clean. So we try to get all the information up front. At least this is what I do. I like to get all the information up front so I know how to prepare the application. Then when we submit it to the underwriter, they're going to give us what's called conditions. Conditions is what the bank needs us to clear. It could be such as verification of employment, or getting a paper for tax returns, or whatever the case may be, before we get to go to the closing table.
Gotcha.
So that is very important as far as getting the documents when you're asked, because if I need a document and and when I say you, I mean like clients in general, and it takes, let's say, a week for me to get a W-2 or whatever, then it's going to delay my process, and I won't be able to move to the next stage. So then when I finally get the document, it's like, hey, you moving too slow. Well, I never got the document to begin with, and I can't move forward without it.
You know, I love that you bring that up because that's a big problem. You know, especially me as a realtor. Of course, I no longer have that problem because I explained those things thoroughly, and that's why we have a great unit right now. But that's huge, man. Because at the end of the day, what we like to tell people is that, listen, it's great that Chris, as a loan officer, he gets all that information up front. Why is that important? What you don't want is a loan officer trying to please you or appease you to get everything moving fast. They're not being thorough and being detailed. Because I could tell you guys some horror stories. Going with the wrong loan officer, it could be a week or two before you're supposed to close, and everything falls through, which is everyone's worst nightmare.
Yes.
And guess why? That loan officer or that realtor as well, they didn't know how to have the uncomfortable conversation of, hey, I'm the professional. I got these licenses. I pay these fees that cost $1 million for a reason. I know what I'm doing. I know what I'm talking about. This is the timeline of how long it takes. Just follow the process. And that's huge because if a person or a loan officer don't know how to have that conversation and they want to make you happy to make you think that things are going smooth and fast, it could come back and backfire on the back end. And the other part of it, why I love that you brought that up, Chris, because we're in this together.
Correct.
Accountability. I know we in society now where people don't like taking accountability, but we hold everyone involved accountable for your actions. To Chris's point, if he needs your bank statements and he emails you on the Monday, get them bank statements to him by Tuesday. Don't get it to him on Friday. And then 2 weeks from now, when we got to ask for an extension of close, you're like, why are you taking so long? Because you took 4 days to get him a document. You send it to him on a Friday night at 9 p.m. He off on Saturday, Sunday, because he got a life to live, and then come back on Monday. So you caused a 7-day delay. So the reason why we bring these things up is that it's all parties working together to get a common goal. But make no mistake about it, you have to be involved. You have to do your part as a client.
So, and I'm glad he said that, and I'm going to touch on this as well. Most lenders, especially your big banks, yes, they're off on weekends. I, however, tend to still work on the weekends, but the bank processor won't work the weekends, which is why it gets delayed. I still communicate with all my clients, even in the weekends, just to make sure that if you have any questions or if I need a document, you can still get it to me on the weekend, which is why we work really good together because we communicate. Whenever you're going through a home buying journey, you want to make sure that your lender and your realtor have great communication because that's one of the worst things that can happen. As a loan officer, I do need a lot of information. I need to be able to communicate with the realtor because if I can't get in touch with the realtor, I'm blindfolded. I don't know. I don't know where the taxes property, if the property needs fixing. I don't know how to so the work won't be as smooth.
Some great top points, man. I mean, we only got a couple more minutes, so we're gonna just touch on a couple more topics because we can't give you all the sauce. First off, if you need a home loan or you need a realtor, contact us. We got you. Go to the website, www.legacybuildersus.com. I know you see it on the screen, but while you're watching, I need you to take a second. Like how they have a moment of silence, let's have a moment of silence. You can go to the website and check us out. Check us out on the website. But to Chris's point, what I want to bring up real quick is the taxes. People got to do their taxes to approve of the home loan. That's a big one. And the other thing, as the topic is debunking myths and unlocking the keys to homeownership, even if you didn't do your taxes, that doesn't mean it can't be rectified. We have clients where they didn't do their taxes for 3, 4, 5 years. But guess what? If they rectify it, get with the right tax person, and of course at Legacy Builders, we have a tax department as well. Go figure. We'll go ahead and get your taxes done, and you can still get approved for the loan. All we need to do is get it done, have IRS show the proof that it's done, and make sure you don't owe money, or if you do owe money, what's going to be the payment or what have you, and you can still get the loan. So stop being afraid. If you didn't do your taxes or you need your taxes fixed properly, we can still help. We can still get you the loan. I mean, you want to elaborate on that a little bit more, Chris?
Yeah, so I'm gonna say some things, and I don't want to get in trouble for this, but
Yeah.
so as far as taxes go, especially for all my 1099 people, Uber, Lyft, independent contractors, so on and so forth, right? Most I get clientele and I get people that say just because you gross in the 1099 field or self-employment or whatever, just because you gross, as I'm going to use 200,000 as an example, doesn't mean your net income is 200,000. And if you're 1099 self-employed, your own business owner, whatever the case may be, we don't go by gross, we go by the net income. So if you claim your taxes and after expenses from 200,000, now your net income is 60,000, we're gonna have to go by 60,000. So keep that in mind, which is why you want to go to a real good tax accountant so that they can help you with that. That way you can understand that when you're doing that, it's not always the greatest idea to put all your expenses, because then the income that we're gonna go by is what's gonna qualify you to see how much you can go for.
So, and Chris, I'm gonna simplify that. What that means is, no disrespect to my barbers out there, but the barbershop mentality. You done made 90,000 last year, but you said that your equipment cost 80 grand. So that means on paper, it looks like you only made $10,000 for the year. So to keep it simple, what Chris is saying, when you go to get a loan from him, you said that your company overall made 90,000, but it costs $80,000 to run your business, which leaves you $10,000. So when you go to him and look for a loan, he's going to say, "Hey, Mr. Client, you can go get a loan based on $10,000. That's the only money that you brought home in your pocket." So I say this to say it's all fun and games, and it's great getting that fat tax return check. Like, I got an $9,000 fat tax return check because I wrote everything off in the world. That's where it backfires. So that's the simplified version of it. Is you can't write off everything. You have to have that healthy balance. Meaning that if you made 80 grand and you wrote off 15 grand, that's 65K. We could work with you, but you can't be writing off all this type of stuff. You can't be writing off every pencil, everything. You opened up your car door at this time PM. I'm writing that. Don't do it. So I wanted to highlight that because you got to simplify for people. Keep it simple, because I was one of those simple people too back in the day.
True. No, thank you for that. And I got another question. So what happens if you do apply for a loan and you get declined or it doesn't work out? Great question. So what I tell my clients is, in the event that it doesn't work out for whatever reason, it doesn't mean that that's it. Goodbye, Mr. Client. It was a pleasure. No. What we do is we're going to come up with a strategy and a plan for the future. Just because you don't qualify today doesn't mean you don't qualify next month, next year, or whatever the case may be. We will help you, prepare you, so that we can get you ready to give you the keys for home ownership.
I love that. I love that. And ultimately, we don't want to hold you up too much. We're dropping a lot of gems today. So definitely, overall, stay tuned, because we're definitely going to be talking about more topics like this. At Legacy Builders, we have this podcast where we talk about finances. So stay tuned, reach out, go to the website, reach out to me or Chris, follow us on our social media pages. Before we give you that information, though, key dates to keep in mind.
Yes.
March 1st, we have an event we're doing where it's going to be pretty much, finance and fun, where we're going over the stuff we're talking about. It's going to be drinks. It's going to be performance. It's going to be games. It's going to be giveaways. But more importantly, it's going to be knowledge about real estate, buying a house, investing, credit, life insurance, interior design. It's going to be everything finances, all the questions all the answers to the questions you may have. That event is going to be March 1st. Stay tuned for the location. We're going to be giving out that information. And then also Legacy Builders has another event coming on March 15th that's going to be in Stamford, Connecticut as well. Similar event, all finances, same thing, all the fun. With that said, Chris, give the people some information on how to get in contact with you, where to follow you at, so we can get some referrals to you.
Yeah, well, you can follow me on Instagram. My Instagram is the number 1stopmlo. You can reach me out there. And as far as the seminar, I advise everyone to come, prepare your questions, write your questions down. It'll be fun, knowledgeable. And I don't know about you, but as far as my concern is, I'm trying to break some generational curses for everyone. We I wasn't taught financial literacy. I wasn't taught on how to buy a home. And this is our goal. This is my goal.
Mhm.
I'm trying to educate everyone so that you can also educate your future generation.
Yeah, and I want to correct you, Chris. We're not trying. We're doing it already. We're doing.
There
We're
you
going to
go.
be helping more people, break generational curses because we've been doing this for a while. We've been doing this for a while. So that's it. As far as us, go to www.legacybuildersus.com. You can book a 30-minute free consultation to kind of go over things from credit, life insurance, real estate, how to buy a house, you're an investor, all of the above. That is our time, people. Comment and post, share, and make sure stay tuned for the events and the next episode.
Bye-bye. All right, people, thank you for tuning in. You already know how to reach me. If you have any other further questions, please shoot me a DM. We'll stay in touch.
Yeah,
That's it.
in the stream again. There you go.
It's-
Where-